Right, part two of the public stock market update. So this is the public version, not the private, longer one for the Great Investments Program. Okay, so this also still looking relatively positive. Would I do 2 times leverage on this? For my personal risk appetite, yes. That's not advice to anybody else because my risk appetite is going to be different to theirs. Right, just so you know. Apple, now, it's still gliding along sideways. The Apple strategy, the issue we've got to decide with this is buy, hold or sell. Well, we know we're not selling. Holding what I've already got, would I buy more at this stage? And given what the S&P is doing more broadly in the market, I don't have a problem with that. This is just to show you what the analysts think would be the return potential if the average analyst was correct from the current price, and that's the high that they project. Alphabet's only going to be for Great Investments Program people. Now, where are we on Microsoft? Again, Apple strategy would apply with this. I would buy more and I continue holding what I have. And I'm certainly not looking to sell, and we'll keep an eye on things. Now, do be warned though, you know, for those of you thinking, oh great, I'll just do 2 times leverage on Microsoft using an exchange traded fund. In February, there's a greater probability it's going to fall than rise. And what if it dropped 10%? Your 2 times leverage, you'd be down 20%. And let's say it dropped 10% in 1 month in February, you'd be down 20%. So before you get carried away thinking, I'll just copy Alpesh, your job is not to copy Alpesh. Your job is to make a determination based upon your own risk appetite for your own pension. Mine does well enough, thank you very much. Okay, and by the way, the other reason I want to show you this is Microsoft's probably the safest company I can think, but you know all those fund managers at St. James's Place and Fundsmith and Scottish Mortgage Investment Trust and all the rest of it, who advertise their wares for year after year. Look, all these years, when the tide was rising and all boats rise in a rising tide, they were saying how wonderful and clever they are. They can't get out of these stocks. Not just this one. They might not have owned Microsoft, they might have owned other ones, but they can't get out of them because they have to hold some equities. They can't go wholly into cash. So they took your mortgage down by about 36% in just a year. Yeah, they destroyed it by 36% and kept telling you, don't worry, nobody got sacked for holding Microsoft. They made you lose over a year of your life in terms of returns. And then when there was a fantastic return last year, all it did was bring you back to 0 over 2 years. Great, thanks very much to those people. And this is why I've written about in my Financial Times columns and my books, fund managers and their problems. Now, Amazon, it's going to be on the Great Investments Program private channel. Disney, as you know, was a special situation on my program. Now it's starting to move up again. Well, isn't that interesting? Okay, so we are with Disney. Don't forget, on YouTube, on my YouTube channel, alpeshpatel.com/links, if you don't know what that is, there's a whole ton of stuff. And don't forget to subscribe to that video channel about why basically pension fund managers mess up your pension. Now, Nvidia, you know the Nvidia strategy, which I call it the Nvidia strategy. It's the same strategy with everything else. If it drops X, sell Y. Okay, because you don't know what the future holds. The one thing you do know is your risk appetite, and there's Y1, Y2, Y3. And this will be, let's say, 10%, 15%, 20%, you might go as far as 25%. You keep a little simple Excel spreadsheet to do that. And what you're trying to avoid is this situation where there's a 63% drop in a year. And that's what, this is not timing the market. This is not trading the market, for God's sake. Even Warren Buffett does once a year. Actually, he does a bit more frequently than that on equities. Okay, it's just to avoid the situation where you lose 3 years of your pension and 63% in a year, which is what fund managers will do to you if you let them. Okay, so it's simple math to do that, and at the moment, nothing particularly concerned about, so we continue watching. Now remember, I got out of this after it fell at this point, and I said, well, it was a special situation from January of 2023. We made lots of money, about 200% odd, maybe 150% actually on this, and said, well, I want to ease back on some of my equity holdings, not least because the monthly MACD, if you go back to my YouTube and so on, from around September, October time, you'll see that, and now, of course, it's falling off again. I said it might return at some point as a special situation, certainly not at the moment. So I'm glad I'm out of it. Now, some people might say, well, what do you think I should do, Alpesh? Well, it's a bit like that old joke about the Irishman who asked somebody, what's the shortest way to Tipperary? And the other person says, well, I wouldn't start from here, mate. Meta, Great Investments Program only. ServiceNow, I'm afraid, Great Investments only. Don't forget we've got a whole bunch of special situations. Now this is interesting with Intel because of course Intel had a bad week this past week. But as you will know, 12 months were up, okay, for that one, and it had that 54% gain, which is instructive because 12 months, once they're up, that 12-month holding finishes. Now, if it's still in the approved further filtered list or a special situation, I can buy it again, which, fine, happy to do. But the reason you revisit after 12 months is because you just do not know what's going to happen in the future. You don't just buy and hold forever. So there we go. For those who did exit and didn't rebuy on the basis of special situation or approved filtered list, great, you just had your 54% in Intel, congratulations. Now Netflix is not one that I own, as I keep saying, but it's one which here I projected and explained that this is what my projection is, and of course 70% is what I expected, nice little earner for the pension, but it's not one I bought because I said I can't buy everything. And I make that point time and time again, I can't buy everything, I don't have this, but I know it's a popular company, that's why I'll cover it. And it's working nicely. So for those of you well on your way to your 70% return, you're welcome, and you can pay for my Netflix subscription, can't you? Look at PayPal, right? This is also education and instructive to show you just how long that can just stay flat. And I said, unless it moves up here, I wouldn't even think about buying it, and even then it would need to prove more to me. And of course it didn't, and it moved back down again. The company's just not going to recover until they change management. Several more points before we go back to the chart. Before we go to the charts, on YouTube you will find my Why Your Pension Fell series, where I cover various brokers such as Fundsmith, Scottish Investment Trust, Baillie Gifford, and how they're just screwing up too many pensions, St James's Place, Fundsmith, and so on. 1 million views have been had. General Electric, popular with hedge funds, not for me. So again, a bit like Netflix, just showing it. I think this is overbought. It'll be instructive and educational to see if I'm right and it does this, or whether the hedge funds are right and it does that. But at the moment, not something I own, not something I would buy. Okay, Cisco, or Cisco, not for me, but popular with hedge funds. And I just thought it'd be interesting to educate you over it. Let's see if it does actually do this. There's a bullish projection, not one I own, one for the hedge funds. Now, personal news. Guess who got the blue tick on Telegram, as well as obviously 1.2 million likes and 281,000 followers? Look at that. Watch out for fake accounts. What the fake accounts do is they have very similar sounding names to me. Then they contact you, they follow you, they engage in a conversation, and then they tell you to put some money in their brokerage. Don't fall for it. Okay, so that's a bit of personal news I wanted to share. And like I said, on my YouTube channel, there is a playlist on why your pension is performing poorly. And if you can't find it, just put into Google Alpesh Patel, why your pension is performing poorly, and you'll see all these videos, and they'll go through things like iShares funds and London Fidelity Asia and a whole bunch of other fund managers through all of that. Do follow and connect with me on LinkedIn. I've been granted top voice there, which is something which even Bill Gates has got. And thank you to everybody who's been writing client reviews. If you go to alpeshpatel.com/links, I would be most grateful if you'd let me know what you think of all of this. And if you want free internships, free downloads of my investment books published by the Financial Times, etc., etc., campaignfor1million.com, which will also explain why I do all of this. As my wife put it so succinctly, Alpesh, you don't need to do anything you don't want to do in life ever again. Wow. Well, other than pay tax, which I have to do this past week. That's why I do all of this. Thank you all very much. Hope you enjoyed it. Let me know in the comments, subscribe and like, that you do like this longer format broken into 2 parts. If there's other bits you'd like me to cover, let me know as well. I might even do a viewer question or a viewer stock analysis for you as well. Who knows? Who knows? We'll almost turn it into a podcast radio station. Maybe I'll do a radio station and we'll do a sort of call-in rather, with people at a certain time. I don't know. Give me ideas. I just love it. Okay, thank you.